I come to you now, Ms. Vadera. I mean, you have seen quite a few banks from close, and now you're seeing this fintech models emerge. Before I get into the regulatory aspect and sort of get your brains in that, tell me one thing and help me understand. What is it that these new banks, or the so-called digital models, are being able to see, which an established traditional bank with years of history of consumer data is not able to see? Just to sort of counter Ajit's point and what he mentioned, that within India, there are many Indias, there are many kind of segments, and you have to perhaps tailor make solutions for customers. So, has the traditional banking space failed where the new banks are trying to grab the space? What really is your view in that direction?
Yeah, thanks. Um, to your question, with these fintechs coming in and the big techs coming into the banking space, whether traditional banks have failed in their, functions as providing banking services. Well, I don't think I can say that they have failed in any way. In fact, if you see the transition to digital banking, it's not that it's started now. It was a process that started even much before. And, with the Jam Trinity in place, the whole thing of digital banking had already started. What the COVID did was kind of accelerate this whole process of digital banking. And the banks are, the traditional banks, I mean, are being faced with, new business models and maybe the way they operate and moving into this whole digital space. They're getting challenges with new non-traditional players coming into the banking space, no doubt about that. But I think what the COVID did with all these containments and lockdowns that were imposed, even the existing traditional banks, uh, by partnering with fintech entities, they were able to provide services which were cashless and machine led, and they did that well. In fact, I would say the years of technology and business model changes that the banks had to do, which normally takes years, was compressed and had to be done in a matter of few months. In fact, the entire payment the government measures that were taken to provide services to the people, especially the underserved people. I think the whole channel of remittance was through the banking channel, and they quite geared up to the occasion, and they did pretty well, I thought, in my mind. And I think that banks have evolved over a period of time, over decades, and they have been facing these kind of new challenges and issues that keep coming in. In fact, I would say that there was a time where you only had public sector banks. Then came in this opening up of the licenses, where the private sector banks came in to give competition to the public sector banks, and they both coexisted and did pretty well. Then came in the foreign banks. So banking has been evolving. I wouldn't say that they fail. They kind of live up to the new challenges that come they have to face. And I would say that a real sector economy is actually dynamic. You can't expect it to stay the same all the time. So it is imperative that the banking system is flexible and competitive to cope with these multiple objectives and demands made on it by various constituents of the economy. And I think an appropriate optimal banking structure is one which evolves in such a way that it accommodates the changing requirements of various constituents of the economy. And I think that's what the traditional banks did. In fact, I think going forward, what I see is I wouldn't say that traditional banks have failed and only we're going to see digital banks. I would, in fact, say that there would be some different segments of banks that will emerge, and I think the first type of banks that would be the larger banks that would have both a domestic and an international presence. And in that sense, we saw the consolidation happening in the public sector banks, which was a step in that direction. And then there would be, these mid-sized banks which would cater to the domestic needs. And then, of course, the smaller banks like the payment banks or the small finance banks or the cooperatives. And then this fourth segment will emerge, which will be, a mix of the traditional banks, which will be in a partnership model, and they would work as their agents and associates. Or there will be also banks which would, be digital banks that would want to kind of interface with the customers directly rather than, in a partnership model. In fact, that I would just like to clarify here that it's when the regulator was licensing banks, it's not that only a partnership model was working. In fact, I would like to just mention here that there were some of these non-bank finance entities which leveraged heavily on technology to provide, credit intermediation and other banking services. And they were given a license as a purely digital only non-bank finance company. And the licensing conditions, apart from the usual licensing conditions, also had additional prescriptions in terms of ensuring the robustness and soundness of their IT systems, in terms of providing for an IT audit and things like that. So Reserve Bank did come out with a licensing for digital only non-bank finance companies. In fact, I would say the payment banks that came were actually experiment with a virtual kind of a bank. I mean, while they had limited functions, but they were not really leveraging only on a brick and mortar kind of presence of banks. They were mostly leveraging on technology to reach out. So that was an experiment. And I think with this committee that the Reserve Bank has set up to look at, how this fintech thing is kind of evolving, and whether new regulations are required or a new licensing requirement is there to kind of just look at virtual banks like you have in certain countries. Maybe that is something the regulator would perhaps look at. But I would definitely say that the traditional banks in partnership did live up to the challenges that came in terms of providing contactless and machine-led services.